Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 22nd of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, stock market investors shrug off trade uncertainty as the S&P 500 closes above 6,300 points for the first time.
Capital gains vanish into black holes in the latest ETF tax trick. We have an exclusive report.
Plus, not such a sterling idea. The Bank of England goes cold on the concept of a digital pound.
Let's start with a roundup of our top stories.
Global equity markets are continuing to defy persistent trade and geopolitical tensions as the S&P 500 index closes at yet another record high. Stocks have surged since their slump in April as some of the world's largest asset managers lean more heavily into the rally. Wells Fargo's top US equity strategist, Christopher Harvey, says he expects the S&P 500 to deliver another double-digit increase in the second half of the year.
What we're seeing is the winners continue to win. The uber-cap companies have the higher margins, are gaining more market share. There is a real secular trade in AI that will continue. I was here during the 90s. This is not a fair comparison. It is much stronger and the fundamentals are much better than today than they were back then.
Harvey is the most bullish strategist tracked by Bloomberg, forecasting the S&P 500 will climb above 7,000 points by the end of the year. It closed yesterday at just over 6,300. The market wager is that while President Donald Trump is threatening to disrupt the economic order once again, he will ultimately step back from the brink. While second quarter earnings season is off to a strong start, the rally faces a key test this week as major companies such as Tesla and Alphabet have yet to report.
Well, corporate profit forecasts are rising faster in Europe, the Middle East and Africa than they are in Asia or Latin America. This, according to the latest data compiled by Bloomberg. Stocks in the region have posted their biggest year-to-date rally since 2009, and analysts are stepping up the average 12-month earnings projections for companies in the MSCI EMEA index. Despite the ongoing threat of US tariffs, investors have been drawn to the EMEA region by factors including economic reforms in Nigeria and Morocco, peace hopes in Ukraine, and gold's boost to South African miners.
AstraZeneca is to invest $50 billion in the United States before 2030, becoming the latest European pharma company to ratchet up spending ahead of potential tariffs on imported medicines. Bloomberg's Ewan Potts has more.
Drug giant AstraZeneca frequently tops the list of the most valuable companies on the London Stock Exchange. Now the Cambridge-based company says it's to invest $50 billion in manufacturing as well as research and development in the United States. Kevin Hassett, director of the US National Economic Council, says that after the investment, substantially all of Astra's products sold in the United States will be produced in the United States. It comes just 6 months after the company abandoned plans to build a new vaccine plant in Liverpool. In London, I'm Ewan Potts, Bloomberg Radio.
Now, US Treasury Secretary Scott Bessent says that there should be a review of the decision to renovate parts of the Federal Reserve's headquarters in Washington. In a social media post, Bessent said the central bank should conduct, quote, an exhaustive internal review of its non-monetary policy operations. Meantime, Florida Republican Congresswoman Anna Paulina Luna has asked the Justice Department to consider investigating Chair Jerome Powell for allegedly lying under oath. She claims Powell made false statements about the Fed's restoration project. Bloomberg's Michael McKee has more.
It holds almost no weight in any other administration. You dismiss it as a publicity stunt. But of course, under this administration, it's hard to know what the Justice Department will actually do since they serve more as the president's lawyers. But there is little evidence of any kind of crime here.
Bloomberg's Michael McKee speaking there as Powell continues to face criticism from President Trump for the Fed's decision to hold interest rates steady.
The UK's Foreign Secretary has described an Israeli aid scheme in Gaza as grotesque as he repeated calls for an immediate ceasefire. David Lammy yesterday joined 27 foreign ministers in signing a joint statement calling for the release of all hostages and the resumption of aid deliveries. The Hamas-run government claims that almost 1,000 Palestinians have been killed while waiting for aid under a US-backed distribution, which Lammy says is inhumane.
It forces desperate civilians children among them to scramble unsafely for the essentials of life. It's a grotesque spectacle, wrecking a terrible human cost.
David Lammy was speaking as Israel has disputed the circumstances and figures for those killed while waiting for aid. Israel also says a letter signed by the UK's Foreign Secretary and others is disconnected from reality and sends the wrong message to Hamas.
Microsoft is rushing to stop hackers wreaking global havoc after they exploited a flaw in the firm's software. Over the weekend, Microsoft released a fix for the vulnerability in servers of the SharePoint document management software, but say that they're still working to repair other parts of the system. The flaw was reportedly used to break into the file systems of national governments in Europe, the Middle East and the US, according to cybersecurity researchers.
Well, in the UK, the ruling Labour Party and Reform UK are separately considering increasing the retirement age. The news comes as Work and Pensions Secretary Liz Kendall announced yesterday the next statutory review into the age when government pensions kick in, currently set at 66. According to Kendall, the system is in need of immediate change.
Unless we act, tomorrow's pensioners will be poorer than today's, because people who are saving aren't saving enough for their retirement, and crucially, because almost half of the working age population isn't saving anything for their retirement at all.
The government's Liz Kendall delivering a speech there in London. While the government's required to review the state pension every 6 years, the last one was in 2023, making this announcement 3 years early. At a separate event, Reform UK's Nigel Farage said he thought the state pension age would have to rise.
And those are our top stories for you this morning. So let's have a look at the markets this morning. US stocks closed at a new high, although only inched up by 1% yesterday. Stock futures for the US in the red. US Stocks 50 futures also dipping now 0.4%. The dollar is a bit firmer after Monday's sell-off. Japanese stocks are down. They're back to trading after the holiday on Monday. 30-year JGB is now trading at 3.01%, so up nearly 3 basis points. Are they vulnerable to more selling? The yield curve has steepened. And of course, we can't forget that there are lots of earnings out this week, including from big US mega cap stocks. But we begin with General Motors earnings today.
Well, in a moment, as those stock markets in the US continue to rise to record highs, we have an exclusive report on the ETF tax trick being used to help rich investors minimise their tax bills in the US, plus the Bank of England going cold on a digital pound. But first, another story you've been reading this morning from our food editor Kate Crader about how it's not just us amateurs, and by us I mean me, who are getting cooking tips from YouTube. Top level chefs are doing it too, so it's fine. It's fine to learn how to cook on the internet.
Yeah.
It's not just... She's talking about James Lowe in particular, the chef who was very recently at Lyle's in Shoreditch, which closed down, who learned how to prepare a bluefin tuna from watching Japanese fish experts on YouTube. Is this the next generation of cooking shows on TV?
Yeah, it certainly is, as long as you have got the skills. I mean, I've got experience of this also, but mainly of the kind of cautionary tale variety.
Stuff that went wrong.
Yeah, you remember this. I mean, it was only a couple of years ago. And one of my kids, very into baking, we tried to replicate a 5-minute YouTube video of an extravagant cake.
Took 7 hours or something like that.
Yeah,
this is the problem.
Is 2 days of the weekend.
I ended up watching the entire video about 15 times over to try and figure out all the parts in between that I've missed. Essentially. So, I mean, the TikTok version of this is like the hyperdrive version of it. But good to know that even those at the very top of their profession are also using these online platforms to up their skills. You can read Kate Crader's piece on Bloomberg.com. We'll put a link to it in our show notes.
Now, after a decade where the S&P 500 index has tripled and more investors are making bullish calls for this year too, wealthy investors are also looking for ways to lower their capital gains tax bills. In the United States, that has led to a rise in a creative tactic, including one using ETFs that is the subject of today's Bloomberg Big Take report. And our cross-asset markets reporter, Justina Lee, joins us now for more on this. So just before we get into those details, let's start with the kind of bullish sentiment that we're seeing in markets. Investors do seem to be less worried about Donald Trump's trade policies right now, that is going to dent their stock market gains. Seems quite a positive backdrop.
Yeah, that's right. I mean, I think it really goes back to, the Trump always chickens out acronym taco. And I think so part of it is that people just don't think that we're going to get the worst of his tariff policies. I think that's one factor. Another is there's still quite a lot of optimism that we're going to get those Fed rate cuts. So I think those combined together, and also the fact that the US economy still seems to be doing pretty well. I think that's kind of keeping the US economy, the US stock market, kind of near record highs.
So a lot of people out there are making a lot of money, Justina, but you have been reporting on this particular tax trick to do with ETFs. Talk to us, how does it work?
So the thing to remember about ETFs in the US is that even when they trade and even when they sell a position that's made a lot of money, they don't usually have to pay any capital gains tax on it. And the reason is that because of the way ETFs are created and redeemed, they don't actually sell their positions for cash. And so when they have a position that has made a lot of money, they want to offload, usually they just kind of trade it in kind with a market maker. And because of this, they don't incur a capital gains tax bill. And it's really just this loophole that was kind of created before ETFs even became a thing. And then it's kind of become standard practice. And is a big reason why we've seen a lot of mutual funds converted into ETFs. And in the case of kind of my story today, I kind of talk about these ETFs that are created from kind of seeded from appreciated securities, so that basically you seed the ETF with these positions that have already made money. And once they become an ETFs, you can trade out of them without paying tax.
Okay, and these are known as 351 conversions. How popular are they then?
Yeah, so that's pretty hard to tell because they're not labeled in any way. Usually you kind of have to do a bit of guesswork, as I kind of had to for this story, because obviously one telltale sign is that they start trading with a lot of assets because they're already seated with these securities. But there are signs that they're becoming more popular. For instance, I speak to this lawyer that says that he has worked to close to 100 of these. And this is only in the last few years. And we kind of see from some more obvious examples that, it feels like there are more and more. Like I speak to one issuer kind of called Cambria, and they've done two, and they're doing two more this year.
Okay, an interesting one to watch. Justina Lee, thank you very much for bringing us details of your report, our cross-asset markets reporter there.
Bank of England officials are considering whether to set aside plans to create a digital pound for households amid growing scepticism over the project's benefits. It's the latest sign of dwindling support for tax-backed digital currencies globally. And our UK economy reporter, Tom Rees, joins us now for more on this. Tom, good morning. Remind us, what is the digital pound and why was the Bank of England actually working on it?
So a digital pound would be like a digital form of cash. It's one of these central bank digital currencies, or CBDCs, that a lot of jurisdictions have been looking at. You'd hold it in a digital wallet like you may do with a cryptocurrency, and would come with a lot of the benefits people see with cryptocurrencies. But crucially, this is issued by the central bank. So it's a safer, more stable digital currency, fully backed by the state. So it comes with, those exciting potential benefits for faster, cheaper payments, lots of cool stuff like smart contracts and micropayments, but without that danger and that instability that we see in the cryptocurrency market.
So why are they now doubting the project?
So there's a few problems. It seems particularly politically difficult in the UK. This project has come under attack from lawmakers here in both the House of Commons and the Lords. They struggle to see a need for it. There are major doubts among the public. Pollings showed that. And then the banks are worried about it because it causes a bit of a financial stability risk. So imagine we're in a crisis akin to the financial crisis. It said rather than running down to the bank and withdrawing your deposits, you put it in a digital pound that is fully backed by the state. So there's that worry. But probably the most crucial factor is that payments innovations are advancing in the private sector, and rather interesting work paper put out by the bank late last year, suggested that the benefits from the CBDC have diminished considerably in recent years, but because of those advances. So it's big, costly, controversial, stability risks, and so maybe that there's not really a need for it anymore.
That's interesting that that digital banking services have diminished that need. I mean, does it actually mean that the digital pound idea is dead?
No, not necessarily. I mean, first of all, it's a joint decision for the BOE and UK Treasury to make, but it's pretty crucial the central bank is worried about it. And, we're seeing globally this sort of shift away from CBDCs, especially since the Trump administration came back into power. Most importantly, is the rise of stable coins. If we see those really emerge as a proper payment method for consumers, and let's say, a US dollar stable coin becomes like a major payment method for UK consumers, then I think we will see the UK probably do a CBDC. We've heard Andrew Bailey, the governor, warn about this risk. He says it could undermine the public's trust in money. In that scenario, I think they probably will have to push ahead. But for now, I think it's just going to put it on the shelf ready, just in case of that risk, and wait and see. Maybe hope it doesn't have to use it, but there is always that risk that it needs to kind of pull it out the locker. So it's wait and see, but they're definitely more skeptical than they were a few years ago when they said they thought it was likely that it was needed. We have seen this major shift in tone.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.